Alrighty. How you doing, friends? This is the 0 days to expiration volume profile weekly analysis. We do this Monday, every Monday morning, right around this time, where we do what I call a clean slate volume profile market structural analysis. This is my own brand, so to speak, of doing analysis using the volume profile. I believe that the way I do it is unlike what anybody else does, and it is the most effective way to do volumetric analysis, in my opinion. I've done a lot of research on this, including the ideas behind what Mandelbrot has talked about in terms of fractal geometry and how that applies to markets and market memory, etc. So now it's time to do the analysis. Okay. All right. So first thing that I do uh, before I actually start the analysis is I clear away all the markup that I had from the previous week, and we start fresh, clean slate, 100%. Remove all the drawings. This is all done on the E-mini S&P. Of course, we trade primarily the options on the SPX or the S&P index. However, the S&P index is a calculated index, therefore it does not have any volume and therefore cannot support a volume profile. So really the only way to analyze the markets effectively is with the E-mini S&P futures contract. So that's why we do that. Now, there are a few other things that you should note. And what I just said just a little bit earlier, I had said that I'm very into analyzing the market profile and market structure. And so from that structure, we can determine where the market has inflection points or inflection levels, areas that will support zones or demand zones or whatever you want to call it, value zones or no value zones, places where the market is most likely to consolidate or trend, and where it's going to have these inflection levels where it will make a decision. And also from that, have this kind of backhanded analysis on the behavior of markets as it enters into one of these areas and with the structure as it crosses that structure. That's the whole point of this. And that's how we come up with our scenarios every day and develop and model our trades around that market structure. So that's why we do this. So the first thing, and I talked about this just a little bit, I said the market has memory. What does that mean? It means that where most people are looking at volume profile from the efficient market hypothesis that the memory is very short-lived, and that's not true at all. The memory in the market is very long-lived, and it can extend back not just days, but weeks, months, years, even decades. And we can make use of that. In fact, virtually all of our structural analysis on stuff that we look at in our service is all based on this. And right now, because we're at market lows, there's not a whole lot of volume behind us in order to provide a profile that gives us relevant information. And so we have to go all the way back to early 2021 or even late 2020 in order to get that profile information that provides us with the levels where we can see there are inflection points, and then the market absolutely respects those levels. It's kind of spooky, as a matter of fact. Lines that I drew that are originated from a year and a half ago are directing or controlling price and levels and finding support and resistance zones. So that's the cool part about all of this. Now, currently, we're in this little bear market rally, and that was initiated originally with the CPI report a little while ago, and then on Friday it got a new amount of energy input into it because the market got a hint from the Fed that they may be softening on their rate hikes. So now the market's thinking, oh, maybe they're going to do a pivot, or maybe they're going to halt the rate hike sometime early next year. And so therefore the market is going up. And that's what we're into right now. Now there's no telling exactly where we're going to go or how much that those rumors or that feeling, that sentiment is going to settle in. In the meantime, we need to figure out where the market is going to be finding support and resistance, and that's what we're going to do right now. So the first thing that I do is I need to identify where all of the major nodes are, where all the major nodes are and where they aren't. All right. So there are volume nodes, and then there's the lack of volume nodes, which I call volume wells. Others may call them value nodes or low volume nodes, LVNs. I don't like that term because they're not really nodes, they're an absence of nodes or an absence of volume. Those are the low liquidity areas. Volume nodes are the high liquidity areas. So if you were to translate that into market market movement, basically, where there's a lack of volume or a lack of liquidity, prices tend to move fast. So those are trending areas. Where there is a volume node, that's where there's gravitas to the market, stickiness. Those are the areas where markets tend to consolidate. The edges of those areas, the edges of the volume nodes, where you have the steepest fall off of volume into the volume well, those are very important areas because they tend to provide boundaries in a volume node into and out of the volume node, and that those are areas of support and resistance. There are also these very low areas in a volume well, the very lowest, where for whatever reason the market has decided that's a no-go level, and we'll see that in a few minutes. Those are also important. I call those LVLs, low volume levels. They're ultra low, and those will provide also inflection levels where the market makes a decision whether or not to reject or allow price to go through. So, with those drawn, they will define the entire market structure. Now that I've talked about it, now I will show you. All right, so the first step is to get enough volume in here to be relevant. And I want to have enough volume so that I can see all the major things that may come into play. And of course, there's nothing below the current volume where we've stopped here. See, right down here. So we need to go all the way back here to 2020 to get that volume. Maybe get a little bit more, something like that. And you'll notice also my volume profile is very plain. I'm not showing up down volume at all. There's no need to see the up and down volume. It looks pretty, but it doesn't provide anything in terms of analysis, the important analysis, and that's the underlying market structure. The market structure emanating from the edges of the nodes where it falls off steepest, and also these tiny pits inside the volume wells. Those are the most important structures in the volume profile. Those are what actually control price. Well, I wouldn't say control, they influence price. They provide support and resistance, and they also provide, like I said before, a way of analyzing market behavior given certain energies coming into the market every day. All right. So the next thing that I do is I will I want it to push out a little bit. And, right now it's only 30% of the width. I like 50 so that I can really accentuate those nodes and see them in all their glory. All right. So 50 is usually a good thing. You'll also notice that I do not have a value area high or a value area low indicated here. In other words, I don't have this value area volume where most people set this at 70%. And they do that so that you can distinguish between an area that has 70% of the volume of the total volume that you see here. That is ridiculous. Nobody in the market, in institutions, are looking at the edges of this value area high or value area low as an area that has any significance at all. The only way it would have significance is if it by happen chance to line up with a volume node. Other than that, it's a completely arbitrary value. As a matter of fact, 70% isn't even the idea behind putting 70%, the idea is to use a one standard deviation, which is actually closer to 68. So it should be 68. That also is arbitrary. So therefore, I just make it 100 and completely get it out of there because it has zero meaning. Zero. Trust me on this. I know what I'm talking about. So the next thing I want to do is identify the major nodes that could come into play in my analysis when we zoom in on these markets, right? So the way I do that is I draw boxes around the major nodes. And I try to put the top and bottom part of the box on the very steepest part of the falling edge of those nodes. All right. So let's say that this is one node right here. I need to try to get it right. You don't have to be exact, but pretty close. That's probably it. Maybe right there. And I'm going to do the nodes that are closest to price right now because those are the only ones that I really care about. This one might be a little bit right about there. And then finally, this node down here, right there, right on the leading edge. It's funny how they all seem to be about the same width. And I like to extend them over to the left-hand side just so I can see where that huge amount of volume actually came from, what it emanated from, right? And so I can see that. It's not critical that I do that, but I like to do it anyways. And I'm going to put one more that's way down here because I have a feeling that we're going to be visiting that. And who knows, it could be this week. Although I'm not so sure with this new rumor that's come out with the Fed and this idea that they may be softening on their rate hikes, their quantitative tightening. And of course, we have the Yellen coming out at about 11 o'clock, and she wants to seize way more power. She wants to integrate the Fed with the Treasury. So I have a feeling she's going to be talking about that this morning. And also, we had the PMI that just came out. I don't know what that actually resulted in, but I know that that could have had some potential impact, and maybe one of the reasons why we are pulling back a little bit in the price. But anyways, those are all neither here nor there. We're here to identify the market structure. So what I like to do is just line these all up just to make everything nice and tight and tidy. And the next thing that I'll do is I will name these, and I will name the one that's closest to price with a T and a suffix. T for, I guess, roughly you can translate to target, right? So with a numerical suffix. So this will be T0. And then the next one will be, I don't know, T1, right? So I'll make this T0. 40 is probably a little bit big. Let's go with 24. All right. So this is T0. And this is strictly for when we're talking about the volume structure inside of our Discord, we can refer to it by name. And so there's no confusion. So the next one I think that it has a potential to go to is this guy. Well, I don't know. Maybe because of the bullishness of this softness in the pivot and all this other stuff, maybe this is the next one. So I'll make that one T1. And then the next one I'll make T2. They don't have to be in order in terms of proximity, just in order of where I think they'll go to next, where price is likely to go to next. And this one will be T3. Okay, so we got those out of the way. The next step is to identify the various volume wells. And so I'm going to call this one above here volume well number 1, again, so that we can identify them. All right, so that's volume well number 1, and then volume well number 2. Labeling is important. And then, of course, we'll do the big kahuna. And that's this guy. This is volume well number 3. That's the abyss. because once we enter volume number 3, it's a long way down, baby. And I believe that we will get there. I think the head of JP Morgan this morning said that we're going to get there too. And so have most of the leaders of the major banks out there. They've all said the same thing, that they fully expect us to take that big plunge and get down to this level here and potentially the top of pre-pandemic levels. But this is the first step in that, and that's traversing volume well number 3. The next step here is to identify the LVLs, the low volume levels. Very important. So what we do here is we get the horizontal ray, and I like to make those green. I just like green there. And so what I'm going to do is pick off the very lowest points here, like there and there. And then up here, there's 2 of them, one right there and right there, the very lowest points. And then we'll go up here too, above T0, right there. And there might be 3 here. There might be one right here. And then right there. All of these things are basically highlighting the market memory. And so what you'll see when we zoom in on these, and let's get these closer so that we can see it when we zoom in. You're going to see that these green lines and these targets that I drew are all going to be extremely influential on price in a session level or a session view. Hold on a second. I had to hit the cough button. All right, so now we're essentially done. So we've done all the markup, but now is the demonstration time because I cannot see levels from here not until I zoom in. All right, and so you'll see that this green LVL here has provided resistance here and support here. The green levels, LVLs, they act as gateways. Either the door is open or closed. Either it will allow price to go through or it will reject it. The targets, we tend to consolidate inside those. Once we leave, we come into a low liquidity area, which are the areas that are not targets, but in between the volume wells. Low liquidity because there's lower volume, even though it doesn't look like it here, because I'm only looking at the volume profile now of what is visible in the window. That's why we draw these markers, this markup, so that we can see where the big picture is, because that is really that volume market structure has memory, and that memory is absolutely influencing price in the present day. That's the key. So here you can see that we zipped through this low liquidity area. This was on Friday. We gapped up, came all the way up to this LVL, got rejected, back down into this node, tried to come back down, got rejected by this LVL, pushed right back up into the node, and now that's where we are right now into T0. All right. How do I know that's T0? Because I marked it, remember? I marked it over here. But that was in a bigger time frame. The scale's way off. So we'll put it there. All right. So for the rest of the week, we'll be marking this up as the market and market price starts traversing across the structure. We'll be using these levels as our guideline to help us produce scenarios that we think may happen as we analyze the geo-macroeconomic condition, see what type of energy is coming in. We look at that as we call it the price vector. The vector has direction and magnitude and where price is likely to go. So then we create bullish and bearish scenarios, and then from that we model our plays for the day, and either they work or they don't. And so that's how everything works. So let's see. Sometimes I compress it and look. move around so you can see all the green levels and everything. It's all there. You can see under T0, under T2, there's not much, it's vacant way down there. All right. So I can back up a little bit and see a little bit more of this. All right. So we can see where we've provided support before over here, etc. All right, there you go. There is the volume profile markup that we use. And this is the only markup that we use. We do not use any technical analysis. The volume gives us everything that we need to see where support and resistance levels are. Also, allow us to at least come up with our own personal swag of where market is likely to go and how it's likely to behave based on the illiquidity zones or the volume wells and the liquid zones, the targets, okay, or the nodes. And let's go back to the big head and we'll say goodbye now that this is all done. All righty, we're all set. Thank you very much for joining me into this week's volume profile market structural analysis. We do this every Monday morning, and then we use these charts for the rest of the week. We mark them all up with our ideas and scenarios and so forth, and then we do it all over again next Monday. So we'll see you then. Thank you very much.